Jai Hind everyone. Welcome to my YouTube channel which is explore yourselves, banking and general knowledge etc. Today I am going to describe about why your income tax refund may be lower than claimed. Complete guide. Introduction. Every year millions of taxpayers eagerly wait for their income tax refund after filing their income tax returns. However, many people are surprised when the refund credited to their bank account is lower than the amount they claimed while filing the return. This often creates confusion and concern. It is important to understand that the refund amount shown while filing the ITR is only a provisional claim. The final refund is determined only after the centralized processing center of the income tax department processes and verifies your return. Let us understand the major reasons why your tax refund may be reduced and what you should do in such situations. Number 1. ITR refund amount is only a claim. The refund displayed immediately after filing your income tax return is not the final amount approved by the income tax department. It is merely a claim based on the information you have submitted. Once your return reaches the CPC for processing, all details such as income, tax payments, deductions, exemptions, and TDS are verified. Only after these verifications does the department determine the actual refund payable. Therefore, the final refund may be higher, lower, or exactly the same as the amount claimed. Option 2. TDS mismatch can reduce the refund. One of the most common reasons for a lower refund is a mismatch in tax deducted at source. If the TDS amount claimed in your ITR does not match the details available in Form 26 AIS or the annual information statement, the CPC may allow credit only for the TDS actually reflected in its reports. This can significantly reduce the refund. Hence, always verify your Form 26 AS before filing your return. Question. Sorry. Number 3. Income reported in AIS can affect the refund. The Income Tax Department now relies heavily on the Annual Information Statement (AIS), which contains information about various financial transactions. If interest income from bank deposits, savings accounts, fixed deposits, capital gains, dividends, or any other taxable receipts appear in that AIS but are not reported in your ITR, the CPC may add these incomes while processing your return. This increases your taxable income and can reduce your refund or even create an additional tax liability. Number 4. Outstanding tax demands may be adjusted. If you have any pending tax demand from previous assessment years, the Income Tax Department has the authority to adjust your current refund against those outstanding dues. In such cases, instead of receiving the full refund, the department may deduct the pending amount and credit only the remaining balance. Therefore, it is advisable to check whether they whether any old tax demands exist before expecting the full refund. Number 5. Errors, incorrect claims, or interest calculations. Simple mistakes while filling your ITR can also reduce the refund amount. Calculation errors, claiming deductions without eligibility, entering incorrect figures, or mistakes in tax computations may be corrected by the CPC during processing. Additionally, interest under various provisions of the Income Tax Act, if applicable, may also be charged and adjusted from the refund amount. Therefore, accuracy while filling the return is extremely important. Documents and details you should check. Before filling your income tax return or if your refund is lower than expected, carefully verify the following documents. Section 143.1 Intimation received from the Income Tax Department, Form 26 AS, Annual Information Statement AIS, and Taxpayer Information Summary TIS, salary slips and Form 16, bank interest certificates, tax payment challans, and other tax related documents. Checking these documents thoroughly can help identify any mismatch or omission before filing the return. What should you do if your refund is reduced? If you believe your refund has been reduced due to an error, first carefully read the section 143.1 intimations to understand the reason. If there is a genuine mistake in processing or incorrect adjustment, you may file a rectification request to the income tax filing portal. If the refund has been adjusted against an incorrect or disputed tax demand, you can also raise an online response against the outstanding demand through the e-filing portal with appropriate supporting documents. Conclusion: a lower income tax refund does not necessarily mean there has been a mistake by the income tax government. In many cases, it is the result of verification of TDS, so reporting of additional income, adjustment of previous tax dues, or corrections of calculations errors. By carefully checking Form 26 AS, AIS, TIS, salary records, bank interest plus certificates, and Section 1 to 43(1) intimations before and after filing your return. You can minimize discrepancies and ensure that you receive the correct refund without unnecessary delays. Disclaimer: this content is intended solely for educational and general awareness purposes. Income tax provisions, processing rules, refund adjustments are subject to the Income Tax Act, applicable rules and amendments issued by the Income Tax Department from time to time. Every taxpayer's financial situation is unique. Before taking any tax-related decisions or filing rectification request, consult a qualified chartered accountant or tax professionals or refer to the official Income Tax Department guidelines. Thank you very much for your patience. Request for like, subscribe and share.